Welcome back. We're in conversation with market veteran Ramesh Damani, who's with us. We've been talking, of course, about the India-US tariff tiff, 50%, what happens to it. And Mr. Damani, of course, so you clearly believe that, businesses here remain vibrant and we've got a large consuming class, which, as I put it, I think last week before last, is our rare earth, if I can use that terminology. I mean, that leverage or whatever you want to call it. Mr. Damani, let's talk about markets. Are markets adequately pricing all of this in right now? I'm talking about the markets here in India, although you alluded to US markets and what they may do. But here in India, what is your sense? Is all of this getting priced in?
I think, on the D-date, the markets were surprised that there was not a rollback. I think the market expectation was that it would be rolled back. It didn't happen, so the market has taken it on the chin for the next few days after that. So I think even as we speak to you, it is kind of pricing that in there. But, the impact is not on the domestic phase economy. The construction company, the telecom companies, the hotel companies. I mean, I don't see why they would go down per se, because that is like throwing the baby out with the bathwater. There are certain export-oriented sectors which are a bit labor-intensive, but not very, very important to the Indian economy. Jewelry, shrimp exports, textiles, which will probably experience a slowdown. But the rest of the economy remains fairly well sheltered from that, because we are a domestic economy, like I've often said, and there's a lot of domestic-facing industry that will continue to do well. Thank you.
Yeah. Okay, fair enough. Markets have been, investors broadly for the last 1 year, Mr. Daman, you would agree. Of course, there are always cases, one-offs and some stocks which do well in any kind of market. But for the first time in the last few years, things have been flattish, Mr. Damani, right? What is your own expectation? I'm not asking for a near-term forecast, but what is your sense? A bunch of people we've spoken to recently have said, and foreigners have been big sellers, although local investors have been even big buyers, but foreign buying does matter. I think as this episode and past episodes also show, for markets to do well. What is your sense, Mr. Damani? Next 2 quarters, 3 quarters, will we make a bit of a bottom? As far as earnings go, will earnings start to perform better on an overall basis? And consequently, what does markets do?
Yeah, it's a question that, of course, perplexes me every day, Prashant. But we've had almost a stellar run since the COVID lows. We've gone up 3-4x on the index level. Individual stocks have obviously done far better out there. So if it remains range bound or sideways for the next years, 18 months, I'm okay with that. I mean, there's no indication yet to suggest that the bull market that began in COVID is over, that it will continue. And markets go through long periods of consolidation before they move up. Having said that, I mean, when I go and visit companies, or I go and visit entrepreneurs, I go and visit speakers, understand what they're saying at conferences, I see no reason to be bearish. I see attractive opportunities to invest at valuations I understand and in businesses I believe in over the next few years, and that is both in the listed space and in the private equity space. So, from my end, I remain sanguine. I think it's a good time to invest in great businesses. And that's always been the mantra, rather than invest in any old thing, is find a good business and remain invested in that business. I think if the market consolidates for the next, say, 6 months, 12 months, it's fine by me. I mean, markets are not of the creature that should go up year on year, year on year. It happens in the first years of a bull market, then consolidate, and then picks up steam again. So I think we may be at best in a good consolidation phase. I certainly don't think we're in a bearish phase of the market. And I would expect that in some due course, the market will pick up and, challenge the old highs.
Mr. Damani, have you, dramatically shifted your focus to the private equity space, unlisted space in that sense? Many investors in your peer set that we speak to seem to suggest that. You're smiling, but is that correct? And do you think that's a function of valuations? I mean, you want to kind of go back and back to find, better starting points in terms of PE multiples. Go on, sir.
I don't know, Prashant. It's one of those things. Yes, I have done it. I moved a bit more money into private equity. Some of it has worked out pretty well for me.
Yeah.
So I think that kind of reinforces that. So you tend to do more of that if it happened. But I would say as an overall, say if you ask me my percentage, I don't think more than 10% of my portfolio is in private equity right now. But yes, I have. It used to be like 98% listed equities, 2% private equity, so it's up to 10%. So it is, getting, to be serious amount. But I think some of the early decisions have proved to be correct, or they made me money. So you tend to, do a bit more of what's making you money. And some of the valuations are, a bit stretched in the secondary market, which is fine. But I'm categorically telling you, thumping the table, I find as I visit companies a lot of opportunities in the secondary markets too. So, I'm happy doing a mix of both.
It's interesting. Mr. Damani, you were bullish on the defense space in a big way. Lots of companies you own. Could you give us a relative sense of your exposure there compared to the peak?
I mean, they have been significantly reduced, but I just got prices that I believe were forecasting 2-3 years of growth. So I was happy to get rid of some of them, but some of them I've still kept. I mean, so it's not that I've exited all the defense. In fact, I haven't exited any of the defense names broadly. I've kept them. Some of them I've lightened my position, just took some money off the table, if you will. But I think if you look at some of the public sector stocks in, say, the construction space, or you look at in the rare earth space, I think there are plenty of opportunities even in that sector in those businesses. So we have moved some money from, say, defense into, say, construction, rare earths, that kind of space, yes.
E-governance solutions, right? I mean, I think has been something that you backed, and you've done that in a way in different ways, right? I mean, on the private side as well. Still remain bullish, Mr. Damani?
To be honest, and I'd use this public medium first to explain this point to you, is that I'm not on any public medium other than coming on television. People ascribe a lot of shares to me, which I may or may not own. But having said that, so please don't follow social media. I mean, if I speak on TV, I am not on any other social media. But I have been bullish on this digital public infrastructure. The stock hasn't worked out. It had a pretty sharp fall. But it seems to have found its legs. Some new orders are coming in. The market seems to have bottomed out. So, I remain bullish on that. But I think I clearly probably overpaid for it. I think that was the risk in the stock. But, the opportunity still looks pretty promising. I wish I had done it at a low rate. But, that's the nature of the market.
Specialty chemicals, another area you like, Mr. Damani?
I have bet a few shares. I have a friend who knows that area particularly well. So he's kind of guided me into that area. Having said that, Prashant, I think the more important point I'm trying to make is that I'm not fully invested in the market, but I'm well on my way to being fully invested in the market. But as always, I'm over 85-90% invested in Indian markets. And I continue to look and hunt for opportunities to find good businesses. I'm not getting rattled by the tariffs or by other things. I think the expansion will continue to take place in India. There's continued opportunities to make money in India. And we are happy if, markets consolidate 2 years. I mean, I'm not certainly of the camp that says that if the market doesn't go up 20% this year, it's been a disaster. I mean, that's just not been my experience.
Well, that's very well put. And I think that nicely brings us to a close in this conversation, Mr. Damani. Thank you so much for your time, sir. And it's reassuring. And of course, lots of insights in that conversation as well. We started, of course, with a bigger picture, 30,000 feet. I mean, US and its relations with the world, India, and of course, a bit about the markets towards the end as well. Really appreciate your time here on this episode of Market Masters.
Thank you, Prashant.
Well, that's it from me. Stay tuned. More coming up after a quick commercial break.